presentation. I often describe Morien Resources by taking a line out of Sesame Street, which is one of these things is not like the others. And you'll find that our company is very different from every other company you're going to see here today and generally in the mining industry. If you did a dictionary definition of what we do, we're a dividend-paying company. We work on mine development. We hold royalty interests in two properties. One's coal and one is granite. They're world-class. They're on tidewater on one side and paved road on the other side. The coal project commenced production in February of last year, and the aggregate project will commence production in a couple of years from now. So we have ruthless discipline in how we run this company, and we really manage it for the shareholder. We take a look at the asset side and the liability side extensively. And we're not interested in being the biggest company or having operations in multiple countries or jetting around the world. We think about one thing, which is delivering returns to the people that own stock of Morien, and I'll go through that. So what's the key drivers for this company? We pay dividends. We commenced dividend on December 27th of this year. Our dividend next year will be $0.01 a share, paid out in 1/4 penny installments over the 4 quarters. Our intention is to pay out the cash from our royalties as ever-increasing dividends. We have royalty projects, so we're not putting the capital in. Others are, so there's strong return, low risk. We have $3.8 million in cash in the company, so we're just saving that to make ourselves a safer investment. And if there's little tuck-in acquisitions, we'll use it to do those. The average royalty from the coal mining operation is we expect to be about $4 to $8 million a year based on sort of current pricing and the mine running at rated capacity. We will look around for growth opportunities. We're not going to go chase precious metals or zinc or copper royalties. There's over 100 very seasoned professionals scouring the earth looking for those royalties. So we're not going to try and compete in that area. We're going to go and buy little corner shots, typically royalties that end in ITE or IUM or those sorts of commodities or basic minerals. And we buy back stock. We bought back 12% of the shares since we started our program because we thought the best royalty you could buy was our own, and we could get it cheap by buying back stock. We started buying stock at around 20 cents or so. So I think we're pretty smart where the stock's trading at 60 cents today. A little snapshot of the company. Ticker is MOX, MOX. We trade on the Toronto Stock Exchange. 54 million shares outstanding. Top shareholders, management and director own 12%. The mine operator, the Klein Group, owns 10%. And we've got some small institutional, otherwise retail held. If you look to the lower right, we're in the safe jurisdiction of Canada and Nova Scotia and Cape Breton, where unemployment is high and people want to work. They need to work there. Look at our stock price. We're the outperformer in the royalty category by a wide margin. We're pretty proud of this. Typically, this slide takes 4 pages to lay out, but we've built this company. The 2 assets were inside of a Mongolian gold mining company called Erdene Resources. And we recapitalized that company and took them out. We sold land that was in Georgia. We recaptured some cash from an asset that tied into older history of the Donkin mine. We did 2 financings, one of them to the public for $1.4 million. There was no warrant on that, which is unusual in the mining business. We did a financing to the Klein Group to have them buy some stock. We financed with them at 30 cents against a 20-cent share price at the time. And then we went and did an issuer bid and dragged the Klein Group up through 10% because they were hiding below the 10% line. And then we did all the work with getting the assets. We took working interest properties and turned them into royalty properties and milestones. So that's where we've got our cash from, and that's where we got our royalties from. So this is a long line of things that we've done to build this company. So our dividend policy, we started it, as mentioned, in December of this year. We're going to pay a quarter of a penny each quarter next year. But we're going to pay a high proportion of our free cash flow out as a dividend. So this company is a cash play on seaborne metallurgical coal. And so this is something we've talked with our board of directors for a long time. We're committed to making this a dividend-paying, cash-paying company. Metallurgical coal, for those of you who aren't familiar with it, there's no replacement for it. People talking about coal going out of style, not being used anymore, it's coal for electricity. It's not about coal for steel. You need coal to make steel. It'll always be around. And so we're levered to the seaborne market. This is a picture of the Donkin property. Note how it's nicely surrounded by the ocean. We're about a par 5 from putting coal onto a boat that can go anywhere in the world. On the other side of that peninsula is a nice paved road that leads right up to the mine site. Here's a little trace of where coal goes in the world, but safe to say you can put it on a boat and it can go anywhere. I've seen some of the history of Cape Breton coal shipments. They went to just about every country you can name. 1.1 billion tons a year is the seaborne market. Here's a picture of the mine operator. It's owned by a guy named Chris Klein. This is his own money. He's in a long line of family mining, like a family of coal miners, and he's invested about $150 million into this project over 2 years. Production commenced, it was February, the end of February last year is when it commenced. We got milestone payments. We got $2 million on closing the deal, $2 million when production started, and another $1.5 million last fall when they started exporting coal out of the project. They built a big wash plant there. That's up and operational in the summertime. And we expect the production to rise to 2.75 million tons. That's what it's permitted for, and it'll take us a couple of years to do that. 25-year mine life. So this is going to be a royalty for a long time, which hopefully means it's a dividend for a long time. Here's a closer picture of the facility with a little bit more money spent in it. You can see a massive pile of coal standing beside the brand new shiny wash plant. Here are the coal prices, metallurgical coal and seaborne coal. We'll be mostly metallurgical, but there is a Nova Scotia coal-fired power plant about 25 miles away, so we can see some of the coal being sold to that. Right now, that coal is at $155 a ton for seaborne met. That's coal sort of on the east coast of America. Here's some calculations on where our royalty would be, but you can see it can grow quite large. At the full production rate and at $155 a ton, we're going to have about an $11 or $12 million royalty coming in. We put this in the slide deck. I won't bother running through a table of numbers for you, but we allow investors to get a sense for what the dividend would be relative to what the coal prices in production are. So I'll leave that for people to look at their own. This mine is a world-scale asset. You may think we're a small company, which we are, but our asset in this mine is as big as the major assets in the other royalty and streaming companies. So this is a big project. For those of you who think that coal is dying, and you hear this often in the media that we're going out of favor with coal, I got a message for you. It's not doing that whatsoever. Take a look at that graph. The bottom part is sort of the North America part of it. So yes, in North America, we're burning less coal. Most of that's due to competition from natural gas that's used for power generation. But take a look at the yellow. That's China. They've gone from nothing to consuming half of the world's coal. There's 1,600 power plants planned to be built around the world in the next 5 years. This coal is a very active and vigorous business, and don't let local media or politicians tell you different. Here's some charts of metallurgical and thermal coal demand from the experts in the coal business, but sort of 2 to 3% production consumption rises in the next 5 years. We're more than just coal. We have some other little projects. This granite project is $100 million capital to be spent. We'll get a royalty off of that around $500,000 to $1 million. That's a 50-year annuity for us, a 50-year project, so we quite like that one. We do have this project generation program, so we're always talking to people about royalties. Earlier last year, we took a position in a company that was rich on undeveloped assets. The idea was that either we would take that company private and turn those assets into royalties, or somebody would come along and buy it from us for a higher price. That has happened, so we got to double or triple in our investment. Don't get royalties out of it, but we think we're pretty sharp in finding the right investing opportunities. We have 1,000 acres in Georgia. We sold off 2 parcels of land in Georgia. We had to wait a little bit to get this one, but we'll sell this off. So hopefully sometime this year you'll see a press release where we clip off another $500,000, something like that. And as the share price drops, we're always happy to separate disenfranchised shareholders from their stock by buying it back into the treasury of the company. In terms of valuation, we trade somewhere around half of our NAV. Most of the other precious metal royalties trade at NAV or above, so we think we're reasonable value in the marketplace. And so 5 reasons to own it. Dividends, dividends, dividends is one. Long life projects, 25 years for the coal mine, 50 years for the granite property. Top tier scaled royalty at Donkin. This is very interesting and pivotal in this company. We get 2% of the first 2 million tons and 4% of everything thereafter. It's permitted for 2.75 million tons. So they up production, and there's a resource base and infrastructure to do it. Our royalty goes up disproportionately. They double production, our royalty goes up by 2.6 times. So we're geared to increases in production more than the average company would be. So Vulcan Materials will develop that royalty Black Point property, and that will just pay all the costs of running our company when that comes up. And so we have royalty incomes. We got a cash position. Our share price we think is reasonably attractive. If there's something worth buying, we can go and buy it. We can finance it. That concludes my presentation. Thank you very much.